In this video, I'll demonstrate a straightforward scalping strategy tailored for the 1-minute time frame. Utilizing the Williams Fractals indicator along with complementary indicators will enhance its effectiveness. This approach is user-friendly, applicable across various markets, and notably, reliably effective. Let's delve right in. First, open up TradingView or whichever platform you use for trading charts. Right now, my chart is set to show 1-minute intervals, but this strategy can be used with any time frame. Let's start by adding the Williams Fractals indicator. Go to the Indicators tab, search for Williams Fractals, and choose it. Leave the settings as they are, just make sure the period is set to 2. As for the colors, it usually shows red then green, but I switched them to green then red to make it easier to understand when looking at the chart. Next, let's put in some moving averages. Go back to the Indicators tab and look for 3 moving averages. Once you've added that, we'll tweak the settings a bit. Change the first one to 20, the second to 50, and the third to 100. To keep things easy, I'll color the lines green, yellow, and red in that order. Now that we've added the indicators, let's move on to how the strategy actually functions. The main rule of this strategy is to buy only when the short-term line, 20-day green, is above the medium-term line, 50-day yellow, and the medium-term line is above the long-term line, 100-day. If these lines cross each other, don't make a trade. Simply put, for buying, the lines should be in this order. For selling, it's the opposite. The long-term line, 200-day, should be on top, the medium-term line, 50-day, in the middle, and the short-term line, 20-day, at the bottom. To start a buy trade, wait for the price to drop below either the 20-day or 50-day moving average. Also, watch out for a green arrow from the Williams Fractal indicator. That's your sign to jump in. Let me show you an example. First, make sure the moving averages are in the right order and not crossing each other. Then, when the price dips under the 20-day moving average, keep an eye out for that green arrow. Once you see it, it's time to buy. Put your stop loss just below the 50-day moving average and aim for a profit ratio of 1.5. Look, in this example, the strategy worked well and we made some money. If the price keeps dropping before the Williams Fractal shows a green arrow, and it crosses the 50-day line before that happens, you'll still enter the trade when you see the green arrow. But this time, put a stop loss just below the 100-day line and aim for a profit ratio of 1.5. Now here's a crucial rule you need to stick to for this trading strategy to work. If the price falls below the 100-day moving average, don't make a trade based solely on the green arrow from the Williams Fractal indicator. Now let's look at how to do a short trade using this strategy. First, make sure our lines are in the right order, with the 100-day line on top and the 20-day line at the bottom. Then we wait for the price to go above the 20-day line and wait for a red arrow from the Williams Fractal indicator. When we see that, it's time to enter the trade. Put a stop loss just above the 50-day line and aim for a profit ratio of 1.5. I've just shared a successful strategy using moving averages and the Williams Fractal indicator. All I'm asking for is seconds of your time to like this video, and if want to learn more about one of top strategies that I use every day, subscribe to my channel and I'll catch you all in the next video.